Hello, good morning, everyone. Welcome back to the Prospero.Ai stock market live streams. I am Steven. I'm going to get us started today before George joins us in about 5 minutes. Um, if you're new here, I'm going to take you through all of our topics for today, and then we'll discuss them. And then at the end of today's stream, we'll be doing a model portfolio update. And obviously, there's a lot going on in the market, so I'm sure there'll be a lot to change in our portfolio. I'm going to get everyone for today, and feel free to comment. I'm curious if you read our newsletters that go out on Sunday nights. Um, I thought this week's was particularly good. So if you don't, I'm going to share a link with you right now if you're interested in signing up. But I wonder how many of our viewers are already newsletter readers. So comment if you are. All right, I got the link for everybody on YouTube. It's posted in the chat right now. You can check that out and save it for later if you're not a reader already. Awesome, Shane. Good to hear that. But obviously, a lot's going on in the market. One of our newsletters titles a few weeks back was "The Bull Market That Nobody Trusts," and maybe it's seeming like for pretty good reason, as there's just a lot of geopolitical tension, a lot of mixed data, um, and just a lot going on in the markets, which we'll discuss in much more detail when George is in here. He starts with a little market update at the beginning of every one of our streams, and we'll go into everything that's happening around the world and all the repercussions of that on the stock market. We changed the bull screener in the Prospero app, which I believe had been unchanged since either December or January. So if you're in the Prospero app, that is one of the tabs on the bottom. It's second from the right. And if you go in there, it shows our daily screener where there's a bunch of stocks listed. So that was just updated today with a lot of the stuff that's going on. There's a new favorite stocks and stocks that are recommended. Um, I think I also want to ask George if tech could become a safe haven because there's so much uncertainty going around the world that maybe those stocks that seem to have a little bit more of a stable cash flow and EPS, maybe investors will flock to them as nothing seems safe anymore. And it's also surprising over the weekend when I was seeing what was happening, I was almost certainty that today was going to open down lower, um, and it opened up, which was shocking to me. We are seeing a little bit of a give back throughout the day. All of the markets are up except the Russell is down 0.56%. They're coming back to neutral though. But before the stream started, I looked at QQQ net option sentiment in Prospero, and it looked decent. It looked kind of where it's been. It's at 37 right now. I think it was at 40 before when I checked, so it's going down slightly. Let's see where the SPY is as well, which has been higher than the QQQ. It's been hovering around the 50 level for a while, down to 43 today. So yeah, the net option sentiment is slightly decreasing. I don't know if anybody's heard of the saying "sell in May and go away" in the stock market, but it's a pretty common saying, and I think it's a little bit of tongue in cheek. Mostly, I don't think it's actually supposed to have that much significance. But I'll kind of ask George about that and say maybe with everything going on, sell in April. Maybe we'll get a head start on that. Um, we got some news out of Tesla today from an internal memo of Elon Musk about how they're planning to cut over 10% of their workforce. And, when we've seen job cuts recently or announcements of job cuts recently by almost every company, the stock has risen off of that news and Tesla declined. So it shows you kind of how much the market is against Tesla at this moment, and how investors just have no confidence in the business. Sell in June since 2010 from Topher. Sell in June since 2010. So it's not May, it's June. Every year, and when should you buy back? September, October, August? Probably like September, right? Get that end of the year rally. Um, but yeah, so we'll go into the what that news means for Tesla and just how they went from a market darling to like they can't do anything right, seemingly in the market's eyes at least. So we'll get into all of that. Apple lost its top spot as the global phone maker, which I actually was unaware that they held the top spot. I thought they were number two behind Android to begin with, but they held it and they lost it to Samsung. And I'll get into the details of those numbers and just how much Apple iPhone shipments dropped in the first quarter around the world, and what that means for Apple stock and maybe the shifting of tides in the smartphone markets. We got some retail numbers this morning, which came in strong. I'll share those with you guys if you stick around till then, and what that means. George has joined the stream. Welcome, George.
Good morning, Stephen.
A lot going on. Got two more topics to go through, but I'm sure all of our viewers are excited to hear what you have to say about what's going on in the markets. But like I was saying, hot retail data this morning. Stick around. I'll share with you exactly the numbers that were released. And I think that just adds to the complexity of the data we're seeing and all of the shift in tides and just how nothing is like on the same page. Everything is kind of battling with each other to see which direction the market's going to go. And finally, we have started earnings season. We got a few banks reporting. Goldman Sachs reported this morning. I'll tell you what other stocks are reporting for the rest of the week. Maybe some stocks will be interesting to you, or maybe you even hold in your portfolio. But that's probably going to be weighing more heavily also as on the markets as we get further along, and some of the bigger companies in different sectors report. But we'll keep everybody up to date on that throughout these live streams. And then we're going to close today's stream, how we always do with the model portfolio update. And like I said in the beginning, I'm sure there'll be some moves to be made with the new news and everything that's going on. But George, welcome to the stream. I already went through the net option sentiment with the viewers. I believe the QQQ was 37 and SPY was 43. So they haven't plummeted too much lower. They're kind of where they've been. SPY maybe dropped a little bit closer to QQQ than it has been, but you want to update everybody on your current view with everything going on?
Yeah, I mean, it looks like we're well positioned, right? We I would say the one blemish on anything that I kind of did over the weekend is like we dropped Eli Lilly. Everything else looks like we held on SMCI, which is like doing the best. We were pretty prophetic on that one again, where it was like my comment was like, if tech does well, I think it'll do better than the others. And that looks pretty true. And then even though retail numbers were good, we had, we held on to leg, we got rid of Cracker Barrel. And so it looks like we picked the right horse there too. So yeah, I mean, I think it kind of speaks to how we always approach, especially like the newsletter picks, which is that, we're conservative first. And like one thing that I'm increasingly saying, just because I say it a lot and I like hearing it come out of my mouth, is you control for risk and the reward will be there, right? Controlling for risk is the hard part. And I think that is like, I like that because I see light bulbs go off in retail investors' minds when I tell them that. And I think that that's something that I do very naturally. And kind of the more I explain this to people and how to use the Prospero signals, the more that's one thing that just like really sticks and speaks to what we did, this weekend too. Because it's just like, sometimes it goes beyond the signals and it goes into the patterns of the signals, right? And one of the things I noticed was even though net option sentiment was a little soft on SMCI, I noticed short pressure was going down. I noticed a positive trend in upside breakout, because you have to look at it this way too. This is at least how I look at it. NVIDIA is down there at like a 66, mid to high 60s upside breakout. SMCI keeps going up. We've seen it go above 90 and then dip a little bit, but I think it was at 89 when I last looked, right? So you might say, hey, SMCI has lower net option sentiment. It's like, well, yeah, maybe it's not, it's not being bet as aggressively because it's the most volatile tech stock right now, because people have such a hard time, figuring out like its short-term PE ratio is, getting very expensive, but its long-term is one of the cheaper, which kind of fits. in terms of what we're saying right there. So it's just like, well, how are people trading? Are people going to load up on a better, short-term play like Nvidia that maybe doesn't have as clear of a long-term story about holding on to that huge growth, huge value, huge market share, or something like SMCI that at their current sales is a little more expensive, but has a much, cheaper future in terms of it just sticking around, growing, and becoming a much more valuable company. I think these are the tough things that, people are facing in the market right now. And, obviously we did well in that because, we just made that kind of simple determination where it's just like, well, in this heavy volatile market, like where do we think people, may be placing their bets more today? Well, I would say on the longer term play and on things like energy and utilities, like we, made sure to hold up on because we just feel more comfortable when people get defensive there. But yeah, in terms of like the up and down nature of the tech market and things like that, it's just like we're seeing very difficult mixed signals. So it's going to be difficult for everyone. I mean, especially, we were in a place where, the 2 weeks before we said, hey, 2 weeks before last, we said, hey, it's really hard to grok this market. We think anyone would have a tough time. But you see, we're always kind of honest about that. And as we got closer to CPI, especially it clicked, where it was like, no, we had the right view in terms of being a little more short than long and thinking the market should be, facing a little more struggles than we saw it facing. And we were correct there. And then even today, where we're a little more net short on a green market, our portfolio is still going up because we're long the right things and we're short the right things. And we're long the right things and short the right things because we're basically right around the way people are managing risk in the market and the way we're managing risk to what we think the institutions are, which is kind of what we always, that's why the signals exist. It gives me a clearer view of where their money is moving so I can get a clearer view how to manage risk around those movements.
So after the news that we got over the weekend, I was almost certain that I thought today would open up negatively. And I'm surprised that the market was able to open up positive. How do you feel about that? And then also, I saw the bull screener changed in the Prospero app. What led to that decision to happen now after it had been the same for a little while?
Yeah, since December. And, sorry, that did confuse some people where they were just like, well, why aren't you updating the bull screener? It's like, well, we're not updating it because we still like it. It was good since 12/15. And it changed yesterday. And you'll notice you're just like, well, those stocks aren't in any of your portfolios. But, one of the things why I loaded up on it is I think sometimes it can be hard to say hey, what is a good stock if I just want pure risk control, right? That's what it is right now. It's a conservative bull filter. It's especially if you have a lot of, higher risk longs, which is what a lot of retail investors tend to have, and you're not comfortable going short, what's the best thing that you can add to your portfolio right now? Lower risk longs. So that's why we put it, up there. We'll probably have it up there and until we, kind of see this, the tensions, fall a little bit. But yeah, I joked about this in the letter, but I've never seen military tensions rise and the market react so strongly. I actually was writing the letter completely differently and then started writing it on Sunday afternoon because I was reading a story that said the futures markets were green. And I was basically like, well, if the market is going to be, if we can expect red, it's not really very honest of me to divest all the positions at Friday close values. But once I said, once I saw them open green and say hey, I'm not sending them into to a market where futures are already bloody and that's not really a very honest thing to do. Instead I actually unloaded them when the market looked green. And I mean, generally I don't look at the futures very much because I want to just write the letter as I write it, because the idea is we're not trying to play the future. That's pretty dishonest. What we're doing is we're trying to play the stocks as we play them, as the signals would indicate, build a view around the macro view and the stocks with the signals as we see them. But yeah, I would say the big thing that was important to me was, I even saw tech went green. I could have easily, like the NASDAQ was more green in the futures. I could have easily just like held our tech and built a portfolio around that. But that's not what we do. We try to build a portfolio, and we get questions on this all the time, like how long do you hold them? We try to build a portfolio at all times, especially in the high conviction portfolio, that we can hold for a long time. But like, and I think this is the important thing. Like, I think people are always looking for in the market more assurance than they're going to get, because that's the easier thing. But you don't really get assurance in the market. You get to have your view, and you need to watch the numbers. And we made a joke about Jerome Powell saying that. And Jerome Powell even says that all the time. They're like, are you going to cut rates? He's like, I need to see the data. And that's the same thing. It's like, how long are you going to hold the portfolio? I mean, hopefully for a long time, always. Like, hopefully a week, a month, right? But like, we don't get our hopes. We do have to change around. We do have to de-risk. And I'm a little overdue for our quarterly review for our first quarter. I'm probably going to write that pretty soon. But one of the things I'm going to talk about is like the difference between, ROI and an annualized return and, just holding it. Because you'll actually see if you hold SMCI, since we first bought it, you would have a higher return. But our annualized return is going to be much better because we hold it, we drop it when, we get uncomfortable. And the easy math behind that is like when you sell SMCI, when you're not as comfortable with the return and you're buying something else that can return more that you're also holding for a shorter period, you're going to have a higher annualized return. And that's what we kind of do. We look at the numbers, especially in the high conviction portfolio, and we hold what we're most sure about at all times. And I think there's a really interesting story that we saw with a company called GL that was near zero. It's a life insurance company that was near zero net option sentiment. And my antennas generally go up when I see something at the bottom of net option sentiment that I've never seen before. We dropped it in the high conviction portfolio 2 weeks ago. We started to see net option sentiment creep up. Of course, it started to go down. We held it in our model portfolio because that's one where, in the high conviction portfolio, what I tend to do is I tend to say, if price action is going the wrong way on me, I'll maybe hold it out for a day. But if I see it 2-3 days, and this is different this year than last year, I'll get out. Why? Because high conviction is about high conviction. And to be honest, my conviction does fade if I'm shorting a stock and it goes up 1, 2, 3, 4 days, or it's turning around in the technicals. That affects my conviction, right? In the model portfolio, what I was looking at in GL was a stock that still only had a 30 net option sentiment, I think near its peak. So it went back down. It never recovered too much. But that's kind of the difference between how we think about portfolios. And it's all about like time and money and risk, right? I wouldn't have told someone that has a higher conviction, smaller portfolio to hold GL, on the chance that it did have the technicals turn around, because the bottom line is, as a stock like that, you can easily be facing like a 20-25% loss. And in our high conviction portfolio, we don't mess around with that kind of thing. We take gains unless we have overwhelming data that there's more gains coming, and we minimize losses as quickly as possible, even if the signals might say, hey, this is still in light of the technicals, this is still a pretty decent hold. So we got that win on the model portfolio, the portfolio that has closer to 100 stocks, and the one that's closer to 10, we're at, I believe, 8 today, on the higher conviction newsletter picks. We dumped it. And that's this is a roundabout way of talking about like what we did this morning, how we managed or last night, how we managed the risk around this event, because the bottom line is the market is behaving very weirdly. And I joked about this in the letter yesterday, that what's weirder than the market not responding negatively to war tensions escalating? That is highly atypical behavior. So it's hard to get a feeling on it, except the only feeling that I had, which was trade defensively, go further into your conviction, the sectors that have looked good, the stocks that you expect to hedge well. That's the whole story with SMCI. Was it my favorite risk reward? No, but it balanced out the rest of the portfolio well in terms of what I was comfortable shorting. I wanted to short 2 tech stocks, and SMCI was the one that could, kind of counterbalance shorting 2 tech stocks because it was the most volatile, highest return tech stock. And we were right about that. And that is the thing that we always talk about, is the difference between process and outcome, where it's just like SMCI easily could have been down 5% today. Would I have said I was wrong? No, because the process was right. I think if SMCI was down 5%, the other tech stocks we had, LPL and Xerox, would have been down a lot too. Maybe not that much, but maybe like 4% each, which net is a better gain on SMCI, or maybe 3% each is still net a better gain. And that is what we talk about all the time. We gather the data, we figure out what process makes sense. And we came into today with a good portfolio, even though it wasn't exactly what we thought. A lot of our thesis that SMCI would be a good long to balance out the risk, that was correct. Our thesis about utilities and energy being kind of the safest things to own, that was correct. Our thesis about, being a little more short than long, because even though the futures were green, we didn't expect that to hold up, that was correct. All of that process was correct. And even if it wasn't correct today, it doesn't mean you depart from the process. And that's the lesson that we kind of had on display for everyone last week. We took a hit on our shorts Monday, Tuesday, but we said, no, I think we're still right. I think this CPI higher forecast is a bit scarier than anyone is really being honest about. And if it misses, it's going to be real bad. And it was. And that's why we were net short. But if I'm being honest, with as crazy as this market has been, I'm sure, and this is why I'm always very open with you guys, as crazy as the market's been, on Tuesday when I was taking a hit on those shorts, I was wondering fairly if I was wrong, if my thesis was wrong, if this bull market was just going to power through. But at the end of the day, that's why you have process. That's why you have conviction. And if there's one thing I teach anyone, it's that the best thing I have is my conviction and what I've done to work around philosophically to make sure that if I still have conviction and I'm still seeing the data I want to see to support that conviction on a macro level, I'm not going to worry about the market too much, or the prices, I should say.
So building off the conversation of how weird this market is behaving and acting, I want to pose this thought experiment to you. And you talked about how you wanted to trade more defensively, which it seems like has been less tech and more like energy materials type of stocks. But let me pose this to you. So could tech become a safe haven, since these businesses are probably the strongest in the world, and the AI strength that we've seen in investment into that area of the market has been so strong for so long now? Could people run to those stocks that just seem to have almost monopolistic businesses that you can predict very well, and in an uncertain market, they might provide a little bit of certainty?
Well, here's the hard thing. They could run to those stocks, right? But that's why we talk about the hardest part about AI right now is being how to value it, right? They could run to those stocks, but what happens if earnings are a little disappointing in this economy where all these people are saying oh, are we in an AI bubble? Is it about to burst? Blah, blah, blah. Any chinks in that armor could cause heavy losses. So yeah, I think if you're saying in a perfect world, right, could those be very safe things? Yeah, absolutely they could. But on the other side of that, there's also the aspect of people are so sensitive right now. There is a world where people could flock to those and they could be big gainers, and there's one that they face a little underwhelming results, and that could be way overblown. So I would say there's more downside than upside to some of this stuff with all the concerns, and that's why we're a little net short right now. And we're kind of picking up would we short big tech? No, that's why we're picking on small and mid cap tech, and we're avoiding small tech like biotech, because that's been really volatile lately. You saw what we said about CYCC, even smaller cap tech like MaxN, which would have been a good short, but we avoided the volatility. So we're being careful about that stuff, and like we're making sure that we're managing the risk around that, but taking the upside when we count on something like SMCI, as long as we feel we're hedging the complete portfolio well enough.
So we seem to be in the biggest test for the AI rally yet. And, a few weeks ago, I think it was two, the title for the newsletter was like the bull market that nobody trusts. Um, so you probably know the saying, sell in May and go away. I wanted to ask you if investors should heed that warning and kind of react maybe early in April. But I think the way you usually position yourself to diminish risk is just lowering lowering your like positional risk and balancing the portfolio more versus actually like selling longs, like a bunch of longs and going like really short.
Yeah, I mean, you're correct. Traditionally, what I will do is I will still I'll still hold some of my high upside longs, and what I'll do is I'll load up more on shorts that I would kind of say, their upside is like their upside if tech does well is medium compared to the high upside longs. So that'll kind of balance itself out, and they'll really outnumber like if it goes red. So I mean, that's how I look at it. But I think I'll be very sector focused. Like that's the best thing, like as I have this year. And like, and just so people know, my story is typically not focusing on sector. My story is like I would say my bread and butter is value tech investing, or some people would call that like growth at a reasonable price, GARP. But when I say like value tech, I mean, like, I'm looking to time, as I did with Tesla last year, as I did with SMCI this year, I'm looking to time tech well. And that's what I typically do. And that's my bread and butter on the long side. This year's been weird because I learned my lesson. Like last year, towards the end of the year, I really like ate into my returns because it was very sector based. But that's what I always tell, like the green was very sector based, some of the sectors that have been beat up. And that's the thing that I always tell people. I'm evolving just like I advise you guys to evolve. And that's why I made sector a much bigger part of my strategy, because I do see a lot of cyclical sector stuff really driving this volatile market. And we'll basically see, I'd say sectors that become trendy start to get a lot more momentum. Like we're seeing, like we expected energy to do well around this time of year, as it always does, but it's done so much better than everything else that like once it started taking off, and we said that, like we said energy's been so down, right? If you go and look at our January letters, you'll find that it's like we'd love to get into energy because we think we would use the word snap back. We said it's due to like snap back, but we still like waited to see, data on that. So I think that that's a very important thing, that we're going to do what we kind of joked about, like Powell saying all the time. We're going to be data driven. I'm going to look for opportunistic tech. I'm going to look to see what sectors are, looking good. So I can say like, oh, I feel safe that like I can pick a long here that that is going to be something that even if the market is a little tough, that this sector will do well. And this is my favorite stock in the sector. So I think it'll do even better than the sector. And I think it's just like little things like that where you de-risk. And we talk about pair trades all the time. And it's just like, that's one thing that we like frequently do. Like this summer, like one of the things I've done with energy, and I actually got burned a few times on it, but just an example. When it looked like energy was losing a little steam, did I sell off FANG? Did I sell off CEG? I sold off one of them for 1 week. But no, what did I do? I added some energy shorts for things that I didn't like as well. And that's really how I think about it. Like if I'm a little bit worried about the market, I'm gonna trim my my horses, my longs that I really like. But I'm not necessarily going to get rid of them to de-risk. Instead, I'll balance that out with a pair trade of other stocks I like less in that sector. So basically all I'm doing is I'm saying like, well, I'm not really making a prediction on tech, right? I don't like to make a prediction on tech in a highly volatile market where it's going like up one day and down the next. I'd rather make a prediction on, okay, I like this tech better than that tech. That's a prediction that is much easier to wrap my head around. And like, I know not everybody goes long short, but that's also why I suggest SQQQ for the straight long people. Because all you have to do in that situation is if you have a tech heavy portfolio, you can put, 5-10%, depending on the risk, in SQQQ. And then that way you don't have to be right about tech going up or down. You just have to be right that the tech stocks you like are going to be better than the whole tech industry. And again, that's an easier bogey.
Mm-hmm. Yeah, and knowing you, I mean, you're a stock picker by nature. You started Prospero, signals for a specific stock. So I feel like you always tend to believe in yourself to be able to pick stocks in any market environment. But it sounds like from what you're saying, like right now, that is even more true than ever. Could you see a scenario where like the SPY, the QQQ, the Dow have either hit their high for the year or they kind of just float around these levels and don't really move much while individual stocks can see gains? It's kind of, from what you were saying, it kind of seemed like it's a real stock pickers market right now to me.
Yeah, and I mean, we said that even going into the year that it's a stock pickers market, and like, yeah, I do feel confident in every market, but I think that's what I always preach about process, right? I think the reason I feel comfortable in any market is because I do, I know an analogy you like. Anytime I do sports, I'm always willing to take what the defense gives me, and that works in sports. And that works in stocks. Like there's some people, and we've talked about this, that are just like, they only do meme stocks, and they might be very good at assessing social sentiment, but sometimes that just gets broken. Or, you're very good with tech, but sometimes just like tech doesn't do well, or you only know how to pick tech longs and you don't know how to pick tech shorts, right? It's so interesting to be able to, like I'm saying, building a toolkit. I'm learning how to use sectors a little better to de-risk my process even further. And like, that's what is so important to do. Like have your strengths, but then continue to build on it when you're not getting the performance. Like I've seen far too many people that are just basically like, oh, like I'm a genius. And then the market goes the other direction. And it's like manipulation. Everything's against me. It's like, those are the only two things that they can see. Like, whereas my attitude, and I think the correct attitude is like, oh, I'm lucky every day. I beat these very smart people that I'm up against. And I better be sure that I'm right. And if I'm not sure that I'm right, what other skills, what other data, what do I need to look at to be more sure? And that's the thing that I think is, that you pick up, Stephen, is that like, in the end of the day, I am confident in what I pick, because if I'm not, I just cut it down. I cut it down and I say, and I shrink the world. And that's what I did this week. And it went well to start. I wasn't perfect. Like I wasn't perfect last week at CPI when I panicked a little bit and I got rid of NVIDIA and SMCI, like not at their bottom. I saw them recover a little bit and I said, hey, this might just be a little recovery. Let me get out before they go back red. And I regret that I didn't, right? I de-risked there. I left some money on the table last week, but it was still a very good week, right? And I did just what I said. I said, what am I confident in? And so like, yeah, you always see me confident because I'm shedding anything that I'm not confident in. And people might think that I make a lot of moves, but that is just to make sure at any given time, everything I'm holding, especially in my high conviction portfolio, is something that I really have a solid thesis in, that I've tested, that I've challenged. And the one piece of advice that I really have for people that I give in pieces is, it's just like, I think a lot of people want to assume they're right and wait till they're proven wrong, right? Even when I'm in a stock, I am looking for why I'm wrong every day. And if I find enough data for why I might be wrong, that's enough to get rid of it. I got to be I have to have a high degree of conviction. Without certainty, I'm never certain. If you're certain, you're overconfident. I want to have enough of a degree of certainty that I'm right. And not only that I'm right, that I have assumptions of when I got into the stock that I'm keeping intact. That's the important thing. And SMCI, like some people asked, and just to like circle back, they might say, oh, like, why are you in it when net option sentiment went down? Well, I'm still in it because I cared a lot more about short pressure and upside breakout for SMCI instead of net option sentiment, because it's so volatile. I can see why people wouldn't have it at 100 net option sentiment because of how volatile it is. But it's like, are people betting against it as much in terms of their shorts? No, they're a little afraid, right? Are they betting on it long term? Absolutely. They believe in the long-term story, and that is enough to give me safety, even though people have some doubts in the short-term options markets, or some people might be swing trading it. And I think the important thing to remember about net option sentiment is that it's looking at calls and puts, right? So net option sentiment could be lower just because calls above where it's trading could start to be be priced less aggressively, attractively on the upside, or puts, or there's more demand for puts, right? So the story could be with SMCI, there's just less people speculating that it's going to go up big in the short term. It doesn't necessarily mean that more people are betting on it going down. And that's all of the nuance that I'm always open to and looking at.
So it is that time of the stream where we talk Tesla. If anybody watches our streams often, it's a common occurrence. But before we do that, let me just ask you guys, if you're in here and you've been here since the beginning, please like the video if you like what we've been sharing. But without further ado, we're going to get into Tesla, which had some news that they are going to be laying off over 10% of their global workforce. It was from an internal memo by Elon Musk. And, George, we've covered some of these stories before. And every time, not with Tesla, every time someone lays off workers, even though it's negative for the real world, the stocks go up. And what do you know? Tesla does that and the stock goes down today. So it just shows you like the lack of faith and how much the market has just turned against Tesla recently, where something that has seemingly helped every other stock and company that's made this kind of news, the market just has no faith in Tesla right now.
So let me tell you a little secret about the best equity analysts out there and how I was trained. Like, especially in kind of like value investing, which in a certain sense is forensic accounting. So to tell people a little bit more about value investing, and it's like where I started when I was 17, I actually taught myself accounting to work at my first value fund. And every smart person I ever worked for when I was a value investing analyst told me this. They told me, use the books and the numbers to figure out if the story they're telling you is real. There's a story they're telling you, and then there's the books and the numbers, right? You want to invest in companies where all of that is cohesive, all of that makes sense. So why am I telling you that about Tesla? It's because Tesla is telling you the story about like, oh, it's just a little threat from Chinese EVs. We're fine. People love our cars, blah, blah, blah. We're not worried, right? They tell that story. And then they're raising prices. They're laying off workers. That is not telling a story that we're good. That's telling a story, accounting wise, that they're worried. They're worried about what? Their profit margins. That's what they're worried about. They're worried about their profit margins. They're worried about their overall profits. They're worried that these sales numbers are going to start hitting their earnings, which is going to start like already. Like I wrote a little thing that I'll update today, and I was going to post it around some things. They were already last Friday trading at an 80 PE for 2024, which was by far the highest for the Magnificent Seven, right? They're looking at that and they're saying, shit, we're going to get hit at these PE numbers, because it's just like, good Lord, why would you buy Tesla at an 80 PE when you could own Google at a 23 PE, when you also have Elon Musk saying like 5 years ago that no one was going to beat Google in AI in private communications, right? And everybody's saying AI is the biggest. Why would you pay 4x for Tesla? when you can own Google. Like, there's not no matter how much the Elon Musk fanboys, who, by the way, when we say sales are down, say like, I see 30 Teslas a day going to my delivery. It's like, did you forget how to analyze stocks? Look at the fucking numbers, right? The numbers. You don't see how many Teslas are driving on the road. It's like you see those same people like hammering the growth numbers when they were good, and now they're talking about like how many cars are on the road or like how they feel about Tesla. And it's just like, oh, all of a sudden you were value investors before, and now all of a sudden you're like, you're talking about how you feel good about Tesla, and you see a lot of them on this thing. And I say that to reinforce the point about value investing and the story, right? You have a story. Your story is Tesla's growing. They have and we were bullish on Tesla, right? Tesla's growing. Tesla's rolling out all these product lines. What's the biggest reason we turned on Tesla? It's because Tesla's like, with the Tesla bot, is basically threatening to like build that in another company. And Elon Musk could do that. Like, whether or not he makes a big show of it or not, he could start putting his best ideas in another company. He could start doing that, no question. And he doesn't really have to disclose that, right? He doesn't have to disclose that he's putting as long as he's putting some ideas into the Tesla bot, like there, and they're doing some development. He doesn't owe Tesla his best AI ideas. So we don't know if he's already doing that. And that's what makes me uneasy, because my thesis was Elon Musk knows how to get these products done. He knows how to grease the wheels. He knows how to run a production line. Look at what he's doing with the charging stations. He might get this Tesla bot. I'm excited what he's doing on the power grid, like all that stuff. But, the threat of taking the AI elsewhere scares me. Now, the story about a pure growth, no blemishes, beautiful story is starting to get tarnished when you start seeing chinks in the armor of the growth story. Does that mean I want to short Tesla? Hell no. But it does mean that the story is cloudy. The story is much murkier than it was before. And to both of you, would you say it's good to invest in Tesla? No, I wouldn't invest in Tesla long or short. There's too many unknowns, right? And I just kind of listed a lot of them, right? What are the unknowns? The unknowns are, let's take a look at the numbers for one, because I haven't looked at Tesla in a little bit, but we're talking about the macro story, right? Let's look. Tesla now has a 56 profitability forecast. I used to see that up closer to, 70, at times, right? Net option sentiment, very low. We typically see it running in the 90s or even 100 to be bullish on it, right? Downside breakout running at 41 is pretty high, especially when you look at, let's look at another company that is also let's look at NVIDIA that also has some higher risk. NVIDIA only has a 17 downside breakout, despite the fact that it has a 66 upside breakout. So the story on Tesla is that, it's looking very uncertain, way too volatile, softer than it looks in terms of the people betting on it, even at a lower price, right? Tesla typically runs at a very high option sentiment, even when it's running at, a higher stock price. So I think that there's just a lot of concern with Tesla right now. And I wouldn't say short it, but it's just when we talk about companies like this, right? Is Tesla still in my top 20 longs? No doubt. No doubt it is, right? But I'd rather SMCI. I'd rather Eli Lilly. I'd rather Google. I'd rather Meta. I'd rather CEG. I'd rather FANG. I'd rather all of those stocks. I'd rather Microsoft, than Tesla, right? And I think that's how you have to look at it. I think especially when your time is limited, and that's why, if people are just none of the portfolios are meant to follow. They're meant to exemplify how I use the Prospero signals to do well, and how you can mimic some of those policies to fit your own risk management style, right? But if there's one thing that I do try to teach, it's that even my time is limited to cover all of these companies, and I do this all day long, right? Do you really want to own 20, 30, 40 stocks when you can't dig in on it? like in a way that even scares me when I'm not like completely dependent on the Prospero signals, which is how I do kind of like the higher churn portfolio. So I just think that like that's the problem. It's not that Tesla's a bad investment. It's just that there's too much positive and too much negative and too much risk to sort through to say I'd recommend it. I think you have to give your Tesla view too, Stephen.
My Tesla view, which remember, John Doe, this is just Steven, another fellow retail investor. I'm not an expert like George. So I listen to George, honestly. I listen to his opinion. So if I gave my opinion, I would say I wouldn't want to invest in them now, but I do like their tech long term. So I think at some point they got to become interesting, at least in my mind. But I'm going to be turning to George just like you guys watching the stream. So I don't like to give my opinion too much just because, like, I'm not the expert, George is. So I like to be kind of an extension of our chat where I could talk to George as a viewer. I think that's kind of why the stream is great, is because, like, I am the everyman retail investor talking to George. So, John Doe, maybe that gives you a little bit of background about the dynamic of the stream. But yeah, I think that's useful information.
Steven's seen me right at a high enough clip that he knows it's dangerous to disagree with me.
Yeah, seriously. I mean, I've been here, it's going to be a year soon, and it's been pretty much every month after month. So, and you guys just have to watch and see if you're new. Stick around. We have another story about a popular stock, Apple, which we talk a decent amount about. This one's not so good. The Magnificent Seven, maybe it's going to be retired soon because it seems like a lot of the companies in there are having some troubles. So Apple lost the top spot as the global phone maker #1, which honestly, before I read the story, I didn't think they had. I thought it was Androids, but they lost it to Samsung. Their iPhone shipments went down 10% in the first quarter. So currently, Samsung has a 20.8% market share. Apple has 17.3%. And I don't know if I'm saying this right, but Xiaomi, a Chinese company, has 14.1%. Do we think Apple could even fall to #3? How do we feel about them losing the #1? Does it impact the company, your investment thesis on Apple?
Does it impact? I mean, it's kind of funny. We're always dissing on Apple, and
we gave them props last year.
We own it in the model portfolio right now because we like them moving to like India. I mean, here's the thing about Apple. Like, I do think that India manufacturing move was very smart. And I think it's just like, I think Apple is still like the best design team in the world, like by far. And it's hard to bet against that. And it's hard to bet against like the power and the connections. And like, even though people are suing the App Store, it is still such an influential part of like phones, which have become such a big part of our lives. Like as much as there is a threat there, it's also just like everybody loves iPhones. Like even if they have to cut their fees, which they may or may not, like it's going to be around. But it is also scary to look at like the way that they haven't been able to grow as much. They have a hard time. Like I think a lot of like really tech heavy people are at this point just like, I don't think the iPhone's that cool anymore. Like I think in terms of the actual features, I think the other phones have caught up. And I will say this, like what I kind of say to them is like, even if that's true, I just know how to use an iPhone at this point. And if I get on anything else, it feels weird. And I don't want a new learning curve on my phone. So yeah, and I mean those people that don't know, like our interface, the Prospero interface, is designed by a former creative director at Apple for 7 years. So like we are absolutely like, we love Apple's design principles and we love the simplicity. And it's like kind of funny when I'm in meetings with designers, like for those that haven't figured this out yet, a little something about me is that I'm not very good at refining information. I have a lot of things that I want to say, and it's very difficult for me to condense things sometimes. And often we're just like, I'm like, oh, you should put a label there or like this or that, whatever. And their philosophy is the design should do the explaining. Like you shouldn't be doing the explaining. And I think that's probably like what I'm referring to when we talk about like the learning curve for other phones, right? It's like other people don't really know how to learn, don't really want to do that part. And that's what makes them good. But like to recap, it is scary that their sales are going down, and it's a very hard company to value, although the PE is becoming, more reasonable. I would say that that's definitely something that we're thinking on, and that, we think is kind of a pretty important, is a pretty important thing.
And this is something that we've discussed with their App Store fees story, why they're going so hard at trying to protect that and keep those fees so high. If they're not going to be making money off selling new phones as much, they have to make the money off the existing phones, which is why the fees that they generate and why actually the market pays close attention to that number every time they report. I believe it's like the App Store total revenue and gross revenue and all that. So it's definitely something to watch with Apple going forward. One thing I will say about them, which I'm sure that Androids probably do this too, but I only know it from an iPhone and Apple user perspective. Once you get one product within their ecosystem, like they make it so easy for all the products to connect that you're locked in basically. Because if I were to switch now, like I have AirPods, I have a Mac, I have an iPhone, like am I going to replace all the things I have? Probably not. So unless Apple were to, like, their products were to fall behind dramatically, I'm pretty much locked in as an Apple user for the foreseeable future. Do you feel the same way about that, George, where their ecosystem kind of makes you locked in there with the way all the products work together?
I think that the funny thing about that is that I'm a PC user, and I would actually love, so I'm not, I would say that like the one story where I can connect on that is I will say that I tried a different kind of like thing than the AirPods, and I hated it because I was just so used to how it connected and everything there. But like, yeah, I mean, I would say that is a big thing that they're doing in people like MacBooks and everything like that. So yeah, I would say that is a selling point for them, and definitely people that have everything are happier.
So we got some retail sales numbers this morning, and this has been one of the weirdest sectors probably in recent times. So sales rose 0.7% in March from February, which is higher than the expectation of 0.4%. And they actually raised higher February's numbers to 0.9% from January. So it's somehow maintaining strength in this weird economy market environment that's happening. But that can't be good for the Fed and everything on that end. So it's weird. It's strong, but it's not good. What do you make of the whole situation there?
Can you just recap the situation very simply, as you call it?
So retail numbers came in stronger, which is kind of bad for the Fed and rates. So Is it good? Is it bad? What does it mean, really?
So, I mean, I think the first thing is that I think we're kind of getting baked into the market already, right? We're seeing that inflation isn't as easy to tame as people thought. We're seeing that, with the market doing well and Powell kind of being like, well, it's going to be, something that, I think if he's clear about one thing, it's like, unless inflation is tamed and like, or there's like clear economic problems, he feels no pressure to cut. So that's why we keep having these like, I think if you told most people right now, like a year ago, most like finance experts, if like we would have 0 rate cuts at this point, how the market would be doing, they would all say it's in the tank, right? So I think that's what's confusing. And basically what we're seeing is AI consistently push up the bullishness of the market. Because remember, like large cap growth stocks are doing way better than everything else on this 1 year time frame. They're carrying the market, right? So we have that, first of all. Then we have like, in theory, like we should start seeing retail numbers like go down, but there was a strong Christmas. We just talked about people expecting a strong travel summer. We have other number coming in. Like theoretically, it's supposed to be that way, but in practice, it's not that way. And if there's one thing that you have to say about the market, and that I always say about the market, it's that, you have to take what it gives you, right? So like there's a push-pull there where it's just like, okay, maybe we're not going to get cuts, right? But we keep not getting cuts and the market keeps being fine, right? So the question is like, are cuts not coming problematic? And to this point, we haven't seen it be that way. So it's kind of people talking out of both sides of their mouth, right? Being like, oh, I'm concerned that we're not going to get cuts. Like as we keep seeing a strong market, right? We keep seeing strong sales. So is it just like, is that a problem? And I think the question is like, I don't know, right? Like, and I don't think anybody knows because like, if there is like next quarter, we start to see like weaker retail numbers, is that going to be a problem? Absolutely. Might that start the rate cuts and fix that problem? Absolutely. But it's just like the one thing that I think is the important thing to take away from this. It's just that like people keep talking about not getting rate cuts as if it's going to be a problem, and it continues to not be a problem. And you always have to watch the data. And the data says that that's just like a ghost story. Like, as far as I'm concerned, people are sitting around campfires being like, ooh, the market is going to be bad if we don't get rate cuts. And then we just see that not happen, right? And it's like, if there's another takeaway, it's like that I want to say, it's like, I'm joking about it. I'm being tongue in cheek because the market's done well, right? But like people do say that for a reason. People do say that for a reason because like it might catch up with us eventually. And that is why I find myself net short, more often than I have in any bull market, right? Because I'm just making sure that like, if that catches up, and the thing about like bull versus bear is bear happens very quickly, right? And sometimes there's one red day and everybody's just like, oh, just a little correction, whatever. And bam, it's down like 4x more the next day. And then all of a sudden you're saying like, and I've had this conversation with myself on many bear days. Like, it's like, oh, like it's got to bounce back tomorrow, right? I'm going to be the idiot that sells. Like, and then it's just a deeper red the next day. And all of a sudden, like 50% of your gains from the bull market gone. So I want to make sure I'm properly conveying the risk on both sides. But, and it's a big but, like everything we've seen that's coming out is that people keep talking about not getting rate cuts and that being a problem, and it continues to not be a problem.
So last thing before we do our switch over, I wanted to read off some of the stocks that are, earnings season is beginning for our chat. And George, maybe if any of these pique your interest, we could go into them more in depth and talk about what they mean when they report. I looked at some of them in Prospero, so I'll talk about that after. But so we got Goldman Sachs this morning, and for the rest of the week, we have some of the interesting ones: Bank of America, Johnson & Johnson, United Health, Morgan Stanley, Alaska and United Airlines, Taiwan Semi, and Netflix. So I looked through a lot of them in Prospero. Two stocks particularly that one looked very bearish, one looked very bullish, at least in my eyes. Bank of America looked really bad, and Taiwan Semi looked really good. Are any of those stocks interesting for you? I'm sure maybe Netflix is probably interesting, one of the more interesting ones for a lot of people in our chat. But anything pique your interest there?
I feel like Netflix had like a pretty low. I
I know
remember.
you from talking throughout these streams, you typically don't like to play earnings.
I don't like to play earnings. And yeah, Netflix, like it has a 66 option sentiment, 60 upside breakout. I mean, very high profitability, 85. That's not the kind of thing that really gets us excited. But I think, oh yeah, Apple's really trading a bit higher now. Today, I was just looking at the PE for that for a segment I'm writing. I'm trying to multitask a little too much. But yeah, I would say that, one of the things that I look for in earnings and in a volatile market is I look for like how sure am I of the growth? And like in that case, Netflix is probably closer to an exception than the rule of not playing earnings. And that's because I think they're doing really smart things in terms of increasing their monetization. Like my family's been sharing an account for a long time, and like more and more, my sister, who's the account holder of that, is getting like texts from us being like, it's locked, like send the code. Like, so I know that they're doing more. And honestly, like the big thing for Netflix that they should do is like they should just make it very clear that like my big thing is like I'll pay for Netflix, but I don't want to have a whole conversation with customer service about being like, I just want my Rex. Like I've been working on that profile for like 20 years. So they're doing better at like increasing their just like shoring up their monetization in terms of like not even getting new subscribers, just getting new subscribers by making it more inconvenient to share. I mean, which I think is very smart. But at the same time, I think that, playing earnings for that is just like you guys saw, like I'll play like, SMCI earnings or Meta or companies I'm not sure if I'm going to play Meta again, although I really want to. We'll see how everything looks up. Got to look at the numbers, got to look at the tape. But, we always talk about bank stocks. Like bank stocks are just like by far the toughest to look at because people don't really speculate on them. So you're not going to get really good, clear net option sentiment readings. If you do, like we've played like BlackRock recently and Apollo recently because we've seen good net option sentiment like on those. And that kind of makes life easier for us if we can do that. But like with all of like the tough to forecast credit stuff and market volatility and not really being able to dig into the balance sheets of these companies, and the balance sheets of banks are much more important than the balance sheets of any other, companies. Like I think you can get away with not knowing how to read a balance sheet when you are looking at tech stocks or, communication stocks or things like that. But like you shouldn't even be touching a bank stock unless you know how to like dig into, the asset mix of the bank. Go and look at their like, their, I forget the filings that they're called, but there's special filings where you can actually like look up the asset mix of the bank. And it's just like, otherwise it's just very, very dangerous. And even if you know that, you don't like, it's very hard to turn that into understanding like what their growth looks like, what their risk looks like. So banking stocks are just very, very hard to look at. Anything else you wanted me to talk about there?
Nope, that's it for our topics segment of the stream today. Do you want to do our switch over and we'll see you on the other side back here?
Oh God, another marathon, Stephen. It's gonna be it's gonna be a tough one. But I think we're gonna go a little faster today, hopefully. All right, I'll be there. See you in a second.
Yep. To our chat, who if you were here watching the stream the whole time today, thank you so much. I hope you found a lot of value in the topics that we covered. Hopefully we hit on some stocks or some questions that you had about the market. So if you haven't seen it, what we're going to do now is George is going to join us from another location, and he's going to do the model portfolio update where he goes through each stock and he actually changes things live for you guys. He's also going to be writing, I forget which letter he writes now during our Monday live streams, but he also writes an update that you get to watch him do as well. So it's funny because George was talking about how much he likes or how much he has like Meta and how he might play their earnings, but he doesn't know right now. But I saw Mark Zuckerberg at UFC 300, so I feel like if he's flying around, going on vacations at UFC events, Meta's probably got to be in a pretty good spot. Or I don't know if he'd be doing that. John Doe, glad to see you enjoyed the stream. Thanks for commenting and being in here today. Good to see you. I saw a lot of usual suspects: Mario, Topher, Jonathan, Joseph, Shane. Thanks for watching the stream. Thanks for commenting. We love getting comments. If you have any questions as we keep going through the stream, feel free to comment them. I'll read them off to George. Let me update you guys on the QQQ and SPY and Prospero. Since we started the stream, so the market opened up, kind of sold off back to neutral when we started the stream. It's kind of rebounded a bit since then. So let's get an update see if the net option sentiments have risen with the market or what's going on there. So the QQQ is at 35. So although the market has risen, QQQ does not, or QQQ net option sentiment does not agree right now. So we'll see if those things come together in the short future. The SPY is currently at 44, and I believe it was at 43 when we started the stream. So the SPY did slightly go higher throughout the stream today. Interesting. And the SPY is up 1/3% now, and the QQQ is up 1/4%. About. So good stuff there. Let me see if we have any comments on Twitter that I haven't been able to check yet today. Let's see how our Twitter users are doing. Any comments on Twitter? If you guys don't know, if you watch on YouTube, we're also on Twitter as well, so you can watch whichever is easier for you, depending on. But no comments on Twitter.
You keeping everyone busy, Stephen?
Oh, yep. We talked about Mark Zuckerberg's appearance at UFC 300. I think Meta's probably in a good spot if he's going out and having fun like that.
Yeah, I mean, it is kind of funny that like they had that big fight, and now like I mean, talk about a crazy turnaround. Like, how many more people like hated Mark Zuckerberg than Elon Musk, and now it's just like it's a different.
It's reversing. You're right.
It's like a different story. Like, that wouldn't have been a bet I took, and I mean, of course, we should say to the Musk people that it's like Musk is really like he's creating bigger fans on one side of the aisle and some bigger haters on the other. And I think Mark Zuckerberg is kind of just like doing better at having less people hate him overall. And I think he has a very good strategy of that, which is one, not talking. Like, it's great. There's no better strategy if people tend to not like, or at least some people tend to not like the things that you say. Not talking is a great strategy. And then a second, like, surprise, surprise, running his business well. Like, don't talk, run your business well. There's no better way to let people dislike you. Because like part of the reality of that is like, you know, I have had more and more people tell me that they invested in Meta stock and did well, right? No better way to have people like you than to make them money.
Money talks.
That's always the better way. All right, let's like I'm getting spun up here a bit, and I'm doing all my checks to make sure I'm displaying the right information and pulling up the right letter. What did you update people on QQQ and SPY?
Yeah, so the QQQ actually did drop slightly since we started our stream. It's at 35 now. The SPY was at 43. So it went, I believe it rose by one rating. That's at 44 now, so it even went up a little bit more.
Yeah. Well, I mean, that's been low for where it is.
Yeah.
But yeah. You know, we do these morning. I wonder if anyone wants to comment if they like the morning update letters that we sell, that we send. We got a special Magnificent 7 update today. We're just getting it all set up because sometimes that's a lot less interesting, me writing that. Oh, this one I should start letting people look at because we have everything else set up. How do I get that info? What info?
All right. You guys can watch what I'm writing here. It's going to be the same portfolio as, what was I there? And then this. Oh, a nice, very similar start. And I think we now want to look at this yesterday. What's the current number? Ooh, 160 and 66. Nice start. We've been like a little volatile around there. We've been pretty consistent for a few weeks on that. Let me see. Somebody's texting me. I just want to make sure it's not anything vital. Nothing vital. All right, that's done. That's done. Oh, I think we actually wanted more of a template from this. God, does it feel like this year is just like going slowly because of all like the action-packed stuff, Steven?
I actually feel opposite. I think time is going by quicker and quicker the older I get, George.
Oh, I just feel
I don't know.
I feel like I'm just like packing so much into these days. Maybe I need to do the Steven relaxation plan.
Time flies when you're having fun. It's always fun at Prospero.
I'm having fun. I'm just very busy. It's nice to have like work be something that you're interested in and passionate about. I just wish I had like a little less of it. Just a little less would be nice. Oh, I hate when I do this. All right, let's see what's going on here.
Now when I see Spiky Dude comment, I don't know if I should call him Spiky Dude or Saul. My brain is like split.
Saul, we know it's Saul now. You know, he has a name. We don't want to make people nameless. That's interesting. We've got value stocks. All right. CYCC, we're taking a look. That was like a small cap. We're looking live. It's actually up. See, so volatile. Oh, Max N was definitely in there. I want to take a look at if there's anything that looks good that we can move on now. What is LSXCM? That was a good call right here. We're gonna. What is it? LSXMA. I don't know how I got that so wrong. Serious. No, that's not even very small cap. Max N, we saw us having a bad day, but I don't really know if we want to do anything there. Asia. No, we're gonna look. We're actually gonna wait until we do the trading portfolio. We're not gonna do anything right now. We're just gonna get this out.
George, the chat is wondering how many words you can type per minute.
Oh, I haven't done like Mavis Beacon in a while, but for those that don't know the story, I was in 5th grade. I was part of a laptop program. So they like took away our pens and pencils. And if you look at my handwriting, it's atrocious. So there's another side to this. They took away our pens and pencils, and they basically and we started to do all our work on computers. So back then, in like my heyday of like taking typing classes as a kid and taking it very seriously, as I do most things, I could get like 100 words per minute. Now with like my old brain and like my less practice, I'm probably at like 60 or 70 words per minute. Like I could type faster making errors, but if I'm just gonna like type like knowing I'm like not making errors, it's probably about that. But yeah, I can type pretty fast. And if you're talking about like just like working in Excel, like and not talking about words, like the actual speed I'm moving on those like hotkeys and everything are like, yeah, that's probably closer to my max value just because it's like such second nature to be moving around in Excel. That's like the equivalent of like an athlete that is like just like nailing like 3-pointers, not even looking at the basket. It's like
It's
that's like
muscle
muscle
memory.
memory for me
Yeah.
at this point.
Did you
Um,
ever do in school? I had the type to learn where they'd put like an orange rubber covering on the entire keyboard, and then you'd have to like figure it out, and like you go
oh
through like
yeah,
lessons. Yeah.
like one of my tricks when I'm like working and like talking to someone is I'll just like look at them and keep typing. And I'll like talk to them and just like keep doing my work. I love to do that. That's a lot of fun. All right. So what did you say here? I forgot about it. I started going out of order because I was very interested in that sector thing. So it opened at what? TQQ?
Let me check again. 30. It opened today at 37. It's actually back to 37 now too.
Safer. Should I leave that? That's a funny word. Leaves us feeling safer. Is that a safer word? More safe. I don't like safer. That's current takeaway. Oh, healthcare is even doing like pretty like. I'm making some very Very interesting spelling errors today. All right, that's done. All right. Longs. We're going to get an updated SMCI. Ooh, 69. Number, like, charging up a little more on that option sentiment. Yeah, 45 short pressure. It's doing like, it looks like the shorts really, all right, what else we got? Let's take a look at FANG. And what was the third? CEG. Whoa. Okay. How about, what are our shorts here, Steven? LPL is looking good. That's pretty easy. All right, now our special section. I already wrote it. I just have to update. Do blue blah 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 blah. I'm going to put this in both letters because why not? It's a good analysis. Oh, did I write? Oops. I guess it's a different draft. Oops. A typo. A typo. All right. Now we're going to go back in here. And then we're just going to go on to our other screen. Sorry, people. And then where were we on this? We updated those. And then we're almost to the second letter. Another marathon. I actually have a 1 o'clock call today I think maybe for my own health, I scheduled it. Hard
couldn't
stop.
take couldn't take a 2.5 hour stream again.
Yeah, no, it's just like, no, we're cutting it off at 2. NVIDIA does this clever thing with their thing where it says like they only have a 2024 actual now, and it's just like I'm not really sure if that means the whole 2020. I'm not really sure what's going on, but I'm posting all 2024, so that's what it's going to be. But that might not be the best way to do this. But I'm just posting 2024. Oh my God, look at Tesla. I guess someone revised their estimates because the stock has been going down and the PE ratio is going up. So someone revised their someone revised their estimates down.
That's what feels like a really bad combination to me. The stock going down and the PE going up sounds
Yeah.
like bad news.
I think you're correct on that one, Steve. All right, I think we're done with this letter. Yeah, we throw people a bone on that. Okay, done with that one. Thank God. All right, one more to go. Grabbing that. It's funny how brains work sometimes. I just got like a push notification from Substack, and I was just like, I wonder what that is. And it's like I just sent out my newsletter. How's everything going here at a high level? Oh yeah, we definitely want to just know what we're gonna do. We're gonna get everything set up. Oh, that's done. We're gonna do this first because we want to get. This is kind of a longer process. Really, that's interesting. I thought it would do better today because we're net short. Whatever. Not gonna dwell. Anything here? I mean, I don't think we really want to cut any longs. Take a look at ELF. Can you tell me about the trend on ELF net option sentiment?
Yes, ELF net option sentiment trend is very stable, bouncing between 53 and 70. Oh, I guess it's not as stable as I thought, but it's currently at 53, but it keeps bouncing back and forth between 53 and 70.
I wonder why this isn't in the filter. Looking good. Did we close out one of our ELFs? Wait, CEG is down. Maybe that's a weird measure. Talk to me about Axon's trend.
Axon is currently at 64. It looks a lot like ELF, where it just is bouncing around between 70 and 80, but like it's at 64 now, so it's currently at a low.
That doesn't look good. All right, how about BlackRock and Apollo? I might cut one of them.
Ooh, BlackRock is at 23 currently. It opened at 63. Downtrending.
Could just be some swing trading, but the price movement, and we did want to diversify with those financials, so I do feel pretty good about that still.
Yeah, BlackRock has 2 other spike downs throughout their trend, and it comes back up.
Yeah.
Apollo is at 37, opened at 44. It's also downtrending.
GW. Are we in a win, GWW? I don't think I like that trend. I think we're gonna get out of that. I don't think we're at a win, but I'm not.
Loss.
That's one of the ones that we always kind of get screwed on. All right, anything else? I don't think so. I think we're feeling good about all this stuff. Oh, wait. TDG. What's going on with TDG? Can you talk to me about the net option sentiment trend on TDG?
It's at 78. It's kind of a very neutral trend. It's very stable between 83 and 77.
Yeah, I think we're going to stay in that thing. How did that CRM thing go? EXP. I might want to get out of that one. What's going on with EXP, the trend there? Eagle Materials.
Ooh, Eagle. It's down to 63 now. It was at 73 before, but it's uptrending. It has a big spike down. That's why it actually looks better, I think, than the trend is. It hit 14 like a week ago.
Are we in a win or loss on that? This one is actually going to depend on that.
EXP is a win.
All right, we're closing it. We're getting out. We're getting out with our shirts. How are we doing on time?
12:31.
SGBI. Did we get out of Warner Brothers Discovery? I feel like we keep talking about how much we hate it. And we didn't get out of it. I think today might be the day. Yeah. God, we just can never get that right. All right, you're not letting me go back into Warner Brothers Discovery, Stephen. I'm just done.
No, I can't.
You're going to say, remember, we're not doing that anymore. And I'm going to say, yeah, I do remember that. You know, look at Max N. Do we take profit on that? With Max N net option sentiment. Picado Education.
It's at 51 now. It was at 22 this morning. 51 is a big rise from it was downtrending.
Yeah, how consistent is that?
The downtrend?
Yeah. Like, is there volatility?
No, it was very consistent from April 8th until Friday. And now it's at 51, though. It's kind of breaking the trend.
I guess everybody's reading these communications. maybe I should share a different screen. All right. Doesn't matter. Hard to ignore that trend. But what's going on? Oh, it's coming out of it. Well, I think CPRI is a win, right?
CPR is a win.
How about COI?
What was it? COI?
CCOI. Actually, talk to me about. Actually, I'm more concerned about the net option sentiment trend on CCOI. I might hold that.
It's a neutral trend. It's at 56, which is the highs of the trend. But it's hit that a bunch and just got rejected.
All right, I think we're done with that. Look at us. We're pacing so well. I think I could actually potentially be on time for this other meeting. Before we do that, we want to get an updated sector. Any update on QQQ and SPY and option sentiment?
QQQ is still 37. SPY is 45.
Did you say 37 or 47?
37.
Just hanging out there. This is just fooling me. I think the takeaways are going to be mostly the same. We just are getting the most current graph, right? Okay. Any update? No, I think that's good. All right. It is finally time. Oh my God. I also have to just delete this. This is being so annoying. I downloaded WinZip and it's just like being insidious. Like, it's not letting me just like open the file like I normally can. Are you gonna let me open? Okay, there. At least it did that. No matter how many times I change that, it's just like, oh, what happened there? Oh, I realize I have this filter has worked well for us, so we just keep doing it. But I did realize that we have I hate when that happens. All right, we're not going to stress about it. All right. Okay. Do we have an active melee? I forgot if we still do.
No, it's closed.
I guess we're going to get back in. I don't really want to, but look. how's the trend on net option sentiment for Intuit? It is tax day today. No, we're not going to get back in. I don't think there's anything else I'm interested in on the long side.
No into it.
No, what's the net option sentiment trend on Intuit?
It's slightly positive, I would say. It's at 70 right now.
Where are those? Why does that move every time? You keep seeing me do that. What's on the bottom there? I don't know why it's doing that, but we're going to do this. And then I'm going to keep not fixing this. I'm not going to be that picky. All right, MPW. What's the net option sentiment trend at MPW? Look at that. Ooh, whoa. Ooh, I think we own that. I hope we don't. God.
MPW down to 18 on net option sentiment, looking negative trend, bearish.
Oh, well. Let's get it. I mean, it isn't an upswing, but we're gonna,
Its trend is interesting. It did have an up spike, and then the price followed, and now it's down. It's like it went straight back down. So
Yeah,
that'll be interesting to watch.
This is something we're like in and out of, like in the past. It's been a while. It's very annoying because this one doesn't update its price very well, or it doesn't at all. Like Google Sheets doesn't automatically put up the price, so I have to like manually. This has been all over the place. Ooh. This could be, I've been looking at Calm, and this could be a new short for us in either portfolio. What's the net option sentiment trend for Calm? Ooh, I like that trend, Steven. I'm getting in. Here we go. It's a live move.
I was muted. Oh my gosh.
What?
Were you hearing me or no?
No, I mean, not if you were muted.
I was
It's a
saying,
good trend on Calm.
my bad. Yeah. I was saying that to myself, I guess.
It's all right. We reached the same conclusion. We might add another long because of that, but we'll be thoughtful. We want to get Calm right now because it's in a good trend. We can't be calm about this. We got to act now. Oh, I sent that to everyone. Oops. Well, whatever. Free tips. I'm not going to do that on the trading letter. Not making that mistake twice. Just give it. We'll leave it in here. We can get it twice. Specialty stores. Oh, it's definitely short. All right. PTCT, we have enough exposure. EPR is real estate. We're avoiding for now. PEB. That does look good. No, we're not. We're avoiding it for now. Oh, this could be interesting. It could be time. Is it time to get back into E short? We've been avoiding it. Looks like yes is the answer. Oh, yeah, big time yes. I think we're also going to short that right now. What's the net option sentiment trend on E before I push send on this?
It is at 13, which is it's hitting the lows of the trend.
Sorry, guys. Very busy. We're going to do the same thing where we double it up. All right. I think we have one short on this, right? Woof. Let me know because we'll add it if we don't. Damn, what's going on with CRNC?
Yeah, one open woof.
All right. Do we have any? What's the net option sentiment trend on CRNC? We might be late on that, but we've got a lot of tech exposure, so I like that.
It opened at 54 today, but it dropped back down to 22. It's in a pretty clear downtrend.
Yeah, that might be something we look at if we dump. I mean, AMH is real estate. Did you ever tell me the trend on Intuit net option sentiment? I don't remember.
Yeah, it was at 70, and I think it was pretty neutral, but I'll pull it back up. Yeah, it's hitting slightly higher highs throughout the trend, but it has a couple big spike downs, and it's currently at 69.
I think it's good to have some exposure on there. What's Broadcom? What's the trend on that right now? I'd like to know. Well, I'm going to look at Microsoft, the net option sentiment there, trend there. I don't love it. Although, net social. What's going on with Microsoft that it's doing so well on social? Anyone know?
Oh, I think I saw the only thing I can think of is I saw OpenAI open some kind of headquarters in Japan, and they were excited about like Microsoft's Japan influence or something.
Stock's really not doing that well compared to it.
Broadcom's trend is like so stable. It's 86 to 89 throughout the entire thing. It's at 89 right now.
Well, let's take a look if anything looks really good on our bull screener. What's going on there? NU, new holdings. Nothing too good there. Anything? FR? Fresh Pet. Well, I kind of like Fresh Pet as a long. Finding it on the screener, everyone. Look at us go. What's APG? API group. I don't love that. All right, I think we're just going to get into. I like Fresh Pet. All right, we are going to do this. The sun is making it very hard to see this. Okay. We added more shorts than I wanted to. I'm just going to take one more look at closing out shorts. SPGI is recovering. Yeah, let's close that out. Let's be a little pickier so we can make room for these new short positions. Ooh, KSS. It's turning around. Can you talk to me about the trend on KSS and net option sentiment?
KSS currently at 39, opened at 28. It's bouncing around a lot between hits like 10 up to 40. Pretty volatile.
Oh, we already had an MNRO. All right, we're going to have another one. I mean, that's a little high, but we don't mind doubling up. KW, LCD, anything else here? What is going on with P10? That's a pretty, I don't like the difference between powers and UTI energy. That actually looks really good. Nova, WBX, Wish. What's going on with Wish? We're just using our extra time here. I'm going to just push send on. Oh, Wish looks good. All right, Every. Oh, Every looks like it could be the way. Oh yeah, definitely. Yeah, okay, that's a great cut. What's going on with the trend on ESCA? ESCA, net option sentiment trend.
ESCA is in a neutral trend. It's currently at 40. Bounces around between 25 and 55.
I think that's going in our direction again. Yeah. We don't need to close that. KW. What about Getty?
Getty currently at 32. It's similar where it's volatile between low teens and 40s. It's hitting lower highs though.
Yeah, I like what we're doing on Getty. All right, I think one more FYBR. All right, I feel much better about that. Then we want to post this. Perfect. Let's pop in a title here. Very literal. Stumbled upon a good title there. All right. Anything else we're doing? We want to send these out exactly. Okay, the only other thing I want to do is we might want to add back a law. And we might want to, Broadcom. Let's take a look at what Broadcom's doing. Because it is, as we're talking about, pretty consistent. LPL turned green. Oh, Google is kind of interesting. Google is in a nice uptrend. How is it doing on net option sentiment?
Google's net option sentiment is neutral. It's at 81, the lows of the trend, but it's bouncing between 87 and 80. But no clear direction.
Just take one look. It was in the negative. It's going back about 4 hours. That's positive. Not good on the 5-minute, but I do kind of like that positive trend. On the 1-minute, it's looking better. We're going to add Google. We're throwing caution to the wind. Because we added a few more shorts. It makes sense to get along that we like to. We don't want to get too skewed short. Okay, now we can send this. Any other questions?
Joseph did ask about The trading and investing letters, and if they add together to be the model portfolio.
If they add together to the model portfolio, I don't know, but I do have to go. I have another meeting. You should post. You should just post our product thing. You know.
Okay, I'll post. Yeah.
All right. Thanks, guys.
Yep. See you, George. All right, Joseph. I'll post this for you in the chat before I sign off today, and then maybe I'll have George talk about it a little bit more next stream because I think some people have questions about that often. Let me try to go back to the Substack home. Are you still in here, Joseph? I always struggle trying to find out where the share feature is in our thing. Let me try to find this right now. All right, this should be for the trading letter. I believe this should be for the investing letter. Like always, we'll be back Wednesday at 3 p.m. Normal stream time. I hope everybody liked the stream today. If you did, please like it up. I'm always asking you. I'm sorry about that, but good for YouTube. We post these on Spotify. So if you can't catch them live or you don't want to watch them on YouTube or you just want to follow us on Spotify, that's in the description. But thank you for tuning in. We'll see everybody back here Wednesday.